Hi everybody, I'm Dave Van Nat. Sometimes you want a quick take on a company's quality, and for that reason I invented what I call quality snapshots. These take 5 company quality ratings from various sources, assign points to their rating levels, and then add them up to a single score that gives me a fast way to judge a company's quality. On the graphic that you see for PepsiCo, you can see that the 5 categories across the top, and beneath them the blue band where the categories are named are the scores for PepsiCo. They're all green, dark green and light green, and in all the tables that I create, all the ratings tables, green is always good. So Pepsi is a very high quality company. Let's go across and look at each category very briefly. The first one is from the Value Line company. They have something called the safety grade, which indicates a company's stability and overall safety, both as a company and in the market. Their scale for safety grades goes from 1 through 5, and they give Pepsi a 1, which is the highest grade on that scale. Moving over 1, the next one is also from Value Line. It's their financial strength grade. Their scale there goes from A++ down through A+, down into the B's, and going from the top down, I do the same thing. I assign 5 points or dark green to the highest rating level they give, and they do give Pepsi their highest rating level on financial strength, which is A++, so that's shown in my table as dark green, and I would give it 5 points. The middle categories is Standard & Poor's or S&P credit rating. S&P credit ratings run from AAA down to several AA categories, some more single A categories, and down into the B's, all of which are considered to be investment grade companies by Standard & Poor's. The highest grade they give, which is AAA, is only owned by 2 companies, Microsoft and Johnson & Johnson. Even the United States does not have a AAA credit rating in the S&P system. In Pepsi's case, you can see that their grade is A+, which is a single A grade, which as I divide them up is 1 tier down from the top, so it doesn't get a dark green color, it gets a light green color. Moving over 1 more, the Morningstar moat rating is like the moat around a castle. It's designed, it's shorthand to indicate that a company is protected from its competitors by, it could be many things, but quite often it's its brands and its sheer size. PepsiCo, as you can see, gets a wide moat rating, which is the highest grade, so again, that's dark green on my chart. And finally, the Simply Safe Dividends safety grade. Simply Safe Dividends is a company that's very oriented directly to the dividend qualities of a company. They grade the safety of the dividend for each company that they cover on a scale of 0 to 100 and divide that scale into 5 tiers, 81 to 100 being the highest tier, 61 to 80 being the next tier, and so on. They award Pepsi a 93 out of 100. That's a near maximum grade, clearly in the highest tier. So again, on my table, it gets a dark green color. The way I do points is simply award 5 for the highest tier down to 0 for the lowest tier and add them up. Pepsi gets 5 in all the tiers except the credit rating, where it gets 4, for a total score for Pepsi of 24 out of 25 points. That puts it as a very high quality company in this shorthand way of looking at company quality. In fact, I looked back through my records and I found fewer than 30 companies in the whole world get 24 or 25 points on this quality snapshot scale. Okay, now we're going to move on to PepsiCo's dividend quality and amount. You can see on the graphic all of the things that I consider to be important to summarize a company's dividend record. Pepsi pays a yield of 3.1%, which is a good yield. They have a consecutive increase streak of 49 years. They've already announced their dividend increase for 2021, which will not take effect until June, but they've already told us about it. It's going to be 5.1%, which is a decent range for a company that pays 3.1%. So I consider Pepsi to be a mid-yield, mid dividend growth stock, which is kind of the sweet spot of dividend growth investing. Going down the graph, we can see the Pepsi's 5-year dividend growth rate is 8% per year, which is a decent rate for a 3.1 yield stock. The dividend growth trend, I always go back and look at the preceding 10 years of dividend growth to see whether it's stable or rising or falling. What I found in terms of Pepsi is that it's usually right where it's been the last couple of years, in the mid to high single-digit percentage rate each year. And finally, at the bottom of the graph, we see the dividend safety score again, which I already explained, 93 out of 100. The dividend safety score shows up for me as part of the quality snapshot, but then it also shows up again here, of course, as part of Pepsi's dividend record. The dividend growth chart from Simply Safe Dividends has not been updated yet with this year's pre-announced 5% increase, so it shows last year's 7.1% increase, which they announced in May last year, and it shows the 5-year dividend growth rate of 8% per year, and the 48-year dividend growth streak, which will become 49 with this year's increase. The graph itself is just the kind of graph that you love to see for a dividend growth stock, up and to the right. That's what we always want to see, up and to the right, up and to the right, with no interruptions in it. Okay, now we're going to talk about Pepsi's valuation. Valuation describes or is a way to assess whether a company is selling for a fair price, a bargain price, or an expensive price at a particular moment in time. Valuations change as market prices change, so you can do a valuation one day and it can be one thing. You can do a valuation a month later and it can be something completely different. In Pepsi's case, and I do this for all my valuations, I use 4 different models of assessing valuation, categorize and rank them, score them using my normal color system, and coming up with a summary of valuation. In Pepsi's case, you can see the 4 valuation methods down the left side. The valuation ratio in the middle, let me explain that. A valuation of 1.00 means that a company is exactly fairly priced according to that method. I consider fair prices to run anywhere from 10% below that fair price to 10% above that fair price, especially if it's a high quality company. And we've already seen that Pepsi is a very high quality company. Going down the individual methods, we see one that's very overvalued, but the other 3 are all in the fair value range. One, as it turns out, is exactly on 1.00, which is at fair price, and the other 2 are below 1.00, but within that 10% underneath band. I simply add them all up, divide by 4, and I get a final valuation ratio of 1.04, which means the stock is maybe slightly overvalued, but it's well within the fair value range. So all of those last 3 individual methods and the overall valuation for Pepsi is colored yellow, which means okay or fair, the way I use colors. As I record this video, Pepsi is selling for about $133 in the market. So applying the valuation ratios and that 10% buffer on either side, I come up with a fair price for Pepsi of $127 and a maximum buy price of $140. So it's in the fair value range right now, and it's at that price approximately that you would receive the 3.1% yield that we mentioned before. Okay, and that's a wrap on PepsiCo. Just to quickly summarize the main thoughts, Pepsi is a very high quality company. It's selling right now at a fair price or near to a fair price, at which price it yields 3.1%. I personally, my wife and I are maxed out on Pepsi, so I won't be buying any. However, if you're interested in adding PepsiCo to your dividend growth stock or just to any portfolio, now is not a bad time to buy it. I would pay up to $140 a share if I were in buying mode on Pepsi. And this is a kind of stock whose price drifts a little bit sometimes. This would be not a bad time to enter a limit order, maybe set a limit of a few dollars below its current price, try and catch it, say in the high 120s, something like that. And that finishes this video. I hope you liked the content. Again, please click the like button and subscribe to the channel. That helps all of us out. Thanks a lot, and I will see you in about a week. I just earlier this week added a stock to my own dividend growth portfolio, and that will be the subject of my next video, probably next week. Thanks, guys. Bye.